Hi, good morning, everyone. We will be starting shortly, so please make sure you are settled in comfortably. Thank you for your patience. I will be starting in just few minutes. Welcome to the Bursa Malaysia Investor Relations Webinar Series 7, titled Gold for the Long Run, Preserving Value in a Shifting Economy. We are truly excited to have with you us today. Thank you for making the time to join. This session is a special collaboration between the IR4U and Bursa Goldina. It is our shared effort to provide meaningful insights and practical knowledge to investors like yourself. We hope today's session will give you a better understanding of a goal as a long-term investment, especially in the current economic landscape. My name is Nabila Shahab, and I'm delighted to be your moderator for today's session. In times of economic uncertainty, gold has consistently remained a symbol of stability and value. Today's session is all about understanding why gold continues to play a key role in the investment world and how you, as everyday investor, can make informed decisions to strengthen your portfolios. I am pleased to welcome our speaker for today, Marisa Salim, Senior Research Lead from World Gold Council, an expert in gold markets. She will be sharing key insights into gold demand trends, factors influencing gold performance, and how gold fits into your long-term financial planning. Before we begin, just a quick disclaimer. This webinar is intended solely for educational purposes, and the views or insights shared today should not be taken as investment advice. Also, a gentle reminder, if you have any questions, feel free to type them into the Q&A box. We'll be addressing them during the Q&A session at the end. With that, hi Marisa, over to you.
Hi, good morning, Nabila, and thank you so much to the Bursa Goldina team for inviting the World Gold Council here today. My name is Marissa, as I've been introduced earlier on, and I'm from the World Gold Council. So today's session is titled Gold for the Long Run, Preserving Value in a Shifting Economy. And with what's been happening, in the gold market, I think it's quite timely that we are here today just to learn a little bit more about what gold is as an asset class and what it can do for your portfolios as well. So, just a quick introduction about the World Gold Council. So, we are a non-profit market development organization. So, our main mission is really to drive industry progress, to shape policies, as well as setting the standards for a perpetual and sustainable gold market. And who we are and what we do. So we have a few hats at the World Gold Council. So for myself, I come from the research and analysis team where we generate research as well as content and understanding about the gold market from a data point perspective. We also have colleagues who are working with policymakers as well as lawmakers into setting principles as well as shaping policies. For example, our work with artisanal and small scale gold mining, or these are really small mines that operate in different parts of the world. And it's really formed by local communities. So we aim to provide support as well as set the principles for the small community of artisanal gold miners. We also have people who are working on developing the market. So they work with other market development organizations. And we also have marketing and promotion. So if you're on YouTube recently, you'll see some ads from the World Gold Council, and working together with many other stakeholders. We're also keen to establish infrastructure. All of this is aimed to improve understanding, improve the access, as well as, improving trust in the gold market. So first, I want to start off by sharing like a fun fact. How much gold is there in the world? So I don't know if anyone knows or can guess, but all the above ground gold that's ever mined can fit into this golden cube. So the golden cube is 22 meters on each side. And if we look at dissecting this cube, you will be able to see that 55% is under jewelry and technology. Whatever that you're wearing on your hands or, on your necks, your necklaces and things like that. So that's considered part of jewelry. And then for technology, you have your phones, your tablets, TVs, um, iPads, and things like that. We also have retail bars and coins. So bars and coins are 1 kg or less. It really is the size of your iPhone for 1 kg bars, and you can buy it on the retail market. And for coins, these are gold coins that you can get, like the ones that, Bursa have, the gold coins. So this is accounting for 21% of uh, gold demand. We also have investors. So what you're hearing from the markets or what you're hearing from the news about ETF demand, for example, or paper gold demand, that comes under investor demand. And lastly, we have also a unique player for the gold market that you won't find in any other precious metals market, which is central banks. So central banks account for 17% of total gold demand. And what do? They collect or not collect, they probably have gold in their reserves as a legacy. So, for example, in the US, around 75% of their reserves, their total reserves, are in gold. And we also have other central banks that are up and coming, and they're also allocating into gold. So one reason that they allocate into gold is really to diversify away from other denominated assets. For example, maybe they hold a lot of US denominated assets. They want to diversify away from that. They want an asset that still has value, so they go for gold. And this next chart is just showing you the growth of demand for gold since 1970. So the reason why we look at after 1970 is because after 1971, the Bretton Woods system collapsed. So the meaningful way to look at gold market demand is really from this time onwards. So you can see here, jewelry and technology has had a steeper climb than any other demand. That's because a lot of people, especially retail investors, they allocate into jewelry as a form of investment, especially in Asia, right? So when we're growing up, maybe our grandparents used to tell us, when you have your first job, you should buy some jewelry and keep it at home. So that is also part of the way of thinking, especially in Asia, that jewelry is also part of an investment. And on this slide, I just wanted to share with you the geographic share of gold market demand. And one thing to note is that most of the gold demand is really coming from emerging markets, whereas developed markets, they have around 30% of gold demand. And the reason for that is that in emerging markets sits two very big countries who also love gold a lot, and they are China as well as India. So if you look at the map, China and India account for 50% already of the total global gold demand. And then we have us here in Southeast Asia, which account for around 8%. And we also have the Middle East, around 10%. So they account for, you know, quite huge consumers of gold as well. And altogether, this part of the world will have around 70% of demand. So, as you may know, this first half of the year has been quite momentous for gold. It's reached a lot of all-time highs, particularly back in April. It reached around 3,500 USD per ounce. And its year-to-date performance has also been quite strong across all currencies over here. Particularly, we have like end of month record high in the US. Back in intraday record high back in April, and then we also have most of the currencies peaking during April as well. And now we want to introduce the strategic case for gold. The first slide that I wanted to share is the fact that we have used data for once back from 1971, which is since the gold standard, as well as the last 20 years. And we compared it with a lot of traditional major asset classes that people are very familiar with, for example, equities, bonds, to some extent, maybe real estate, FTSE by the FTSE developed markets. And then for commodities as well, just at the bottom of the slide, you'll probably get to know which indices we use to compare. And we use the all series total return. So on this end, right, when we are speaking with a lot of people, people don't really realize that gold also provides high returns on a cumulative basis compared to maybe equities because probably people are more familiar on how to invest in equities. They know which equities or stocks to pick. And all of these are actually the growth engine of a lot of portfolios across the board. But what we wanted to also share is that gold has also preserved its value. It has also allowed people who allocated into gold over the last 20 years to also obtain the high return. So naturally, the only way to profit from gold is by the difference in price. And on a cumulative basis, gold has had quite a good standing in the league board. So from 1971, it just takes the third place after real estate and equities. And then for the last 20 years, on a cumulative basis, it has been high, especially with what's happening in the recent years. And another thing about gold, one of its attributes about gold is that it is a crisis hedge. And looking at all the data that we have as of December 2022, right? And we look back until you from the dot-com bubble, you can see that during times of crisis when, global stocks, of course, they tanked, and global treasuries would provide some anchor to your portfolio as well. But none of that can compare to how gold has helped or how gold has helped portfolios who were allocated to it during this time. Now, I think if you look at this chart, you probably look at dot-com bubble and you're seeing how come gold is also, going down together with global stocks and then US treasuries are on the positive side, right? So the reason is because during crisis, right? Initial periods where crisis has bubbled in the financial markets. We have things like margin calls and the need for liquidity for a lot of people who are trading. So what they do is they would exchange gold for cash in order to defend some of their positions. So initially in the dot-com bubble, gold has had a negative territory, but if you see the year after dot-com bubble, you would know that gold has had the highest return after crisis period because people tend to shift out of risky assets into safe haven assets. And again, as everybody would know here, uh, we buy gold or we allocate into gold for the fact that it preserves value or is a store of value, and it tends to work better during periods of high inflation because when there's period of high inflation, generally the gold price would also creep up. And having that sort of value in gold would protect the erosion of your purchasing power. And when it comes to monetary debasement as well, gold has had a good run when it comes to, and this is in the context of the US monetary debasement. So the growth of US M2, that just means that, Fed is printing a lot of money. And it's also a um, indicator of uh, erosion of your purchasing power. So if the central bank is printing a lot of money, then the value of your money declines. But the fact that gold price can also keep up with that just means that it is a good hedge against inflation as well as monetary debasement. So looking into a local perspective, I got into three things here. So the first thing is looking at gold in Malaysian ringgit, and then a bunch of local equities, as well as MYR and USD. So it's just a way to look at how gold has preserved value even in the local currency and how it provides a good way of protecting your capital. So since 2019, which is around 5, 6 years back, gold and ringgit has been up 166%. It has outpaced inflation. I know inflation in Malaysia is sort of moderated now. It has also outpaced flatter performance in equities as well as FX. So this is just a benchmark, right? The local equities is just a benchmark. Of course, if you have a different basket of stocks that you have and then they outperform the benchmark, then you are very good at stock picking. But my point here is that even in periods whereby there's a lot of uncertainty happening, like for example in COVID 2020, we've got the uh, debt crisis as well as the eurozone pullback, something that might have a spillover effect into the rest of the world. Gold has helped portfolios to hold on to that value. So now we want to look a little bit on what is driving gold demand. So as you know, the price or performance of gold is determined by when the demand and the supply curve cross, right? So the reason why we look at gold demand is because there are so many players within the gold market, and a lot of them really, really allocate into gold in various ways. So the first one is ETF. So this is gold-backed ETFs that you can allocate into. For example, we have the GLD, GLDM, the Spider Gold shares, for example. So this is what people allocate into. So generally in the West, they prefer paper gold or allocating into non-physical but gold-backed financial instruments such as the ETFs. So the US used to be a key allocator into global ETFs. And then, of course, you can probably imagine that investors, when it comes to an appetite for risky assets, they would allocate outside of gold ETFs, probably put it somewhere else. And then when it comes to periods where safe haven assets are needed, they will rotate out of equities and then they'll put that in gold ETFs, for example, among other safe haven assets. So what we are seeing here is that the purple bar, which is the US, they have had kind of hot and cold allocation into ETFs, and they are the ones that actually really drive the demand for global ETFs. So their market is much bigger. Um, Over the past couple of years, that purple bar has been up and down, but what we're seeing here is after three periods or three different quarters of negative allocations into gold ETFs, we are seeing a strong allocation into gold back ETFs from the US, which is the purple bar. And one thing to also note is that we are also seeing it from China. So before that, China, which is this kind of like a greenish bar over here. You can't really see it that obviously in a lot of these bars if you're just looking at the color, right? But what we are seeing here is that as financial markets mature in countries like China as well as India, the appetite for gold is cultural, but it's also something that's quite ingrained um, in both these countries. So you'll see that the ETF demand for China has also come up. We also see some from Switzerland, but really very small, a bit from Germany, but also again small from the UK as well. So most of it is really coming from the US and increasingly also coming from China. And the reason also, right, just to share why Chinese investors are pretty bullish on gold is the fact that they don't really have much alternatives in China right now. So I know the Hong Kong stock market is probably doing pretty well these days. But in China itself, they're still grappling with kind of flat equities as well as the property slump. So they really have no other alternatives, and they would, put that in some safe haven assets like gold. And this is just letting you have a, brief idea about how gold bar and coin demand by market looks like by tonnage, as well as how much APAC actually has an influence in it. So I do think that APAC is becoming the new epicenter of gold demand because this is what we see in the data and the number, and the trend is pretty consistent. So what we see here is the purple bar again, is APAC. As you can see in 2013, they probably had like that peak and then it tapered off a little bit for APAC before it started to climb up. So APAC's Apex percentage of total gold demand has actually reached more than 60%. This is gold bar and coin. So the physical gold bars and the physical coins that you can actually hold. So in Asia, generally, this is kind of the go-to uh, method to allocating into APAC, to allocating into gold, as well as ETFs. ETFs are up and coming, but this is generally the preferred method. And if you're looking at this year's first half for bar and coin investment, the first half of 2025 has been marked with a lot of uncertainty. There's tariff talk. Markets are, you know, a bit funny as well. So what people can do during this time is to allocate into a certain asset, such as gold, that they know will preserve their value amid the volatility. So we are seeing the strongest first half since 2013 of bar and coin investment for the entire world. So total value has also climbed to more than 30 billion USD, and this is because of the price of gold, of course. But we haven't seen this uh, strong demand for Bitcoin investment in the first half of any year since 2013. And a lot of it is also um, influenced by India as well as China, ASEAN, as well as the rest of Asia. So you can see probably towards the end of this chart, right? The purple, blue, light green, and dark blue. This is all under APEC demand. And when we are looking into central banks, right? So we're firstly at the start, we are thinking about how central banks are allocating into gold. Why are they allocating into gold? So the reasons are a few. The first is a lot of these central banks go on a multi-year buying program. So they would at the start of maybe year number one, they would say that, okay, by 5 years, our target allocation for gold as part of the reserves would be 20%. And this is a real example from Poland. So during this time, they would buy gold in incremental amounts. And there are two ways that they can do it. They can either tell IMF by reporting to IMF, or they can not tell. So that's the thing with central banks, they're quite secretive. But what you're seeing here on the chart is that they are reporting this data to the IMF. So recently, the Polish central bank governor mentioned that the target to allocate into gold has been 20%, right? So they go on this multi-year buying program. They want to make sure that the target hits 20% of their total reserves. So what does the central bank reserve look like? So they'll have gold, they'll have foreign exchange, they have other financial instruments in their portfolio, but gold is that legacy asset that they pass down from one generation to another, and that is being built from years on, which is why most central banks in the Western nations, they actually have a lot of gold, like maybe 70% for the US, 40-50% for rest of the other Western central banks. They have much more. Whereas the central banks in the emerging countries, like you can see over here, they have much less. For China, the Central Bank of China, they only have around 5 to 6% of gold in their entire reserve portfolio. So China has been quite a big buyer of US treasuries, right? But what is being changing here is that with what's happening in the US, there's a lot of multipolarism in the world right now, and people are trying to really diversify away from US denominated asset. And every year, we also run a central bank survey. And this central bank survey really tells us what's in the minds of the central bankers. And around 40+% of them feel that gold will still remain relevant, especially in the next 12 months, and they are looking to allocate into more gold. But that being said, once they reach that um, allocation that they want, they might start to taper off buying gold. So, for example, for Poland, right? They have reached or are reaching that 20%. So then we'll have to look into the data and see whether they're continuing to buy or they are okay with the fact that their allocation target is 20%. And then we also have other central banks that probably won't tell us whether they want to have X% or Y%. And we would just have to keep looking and monitoring the data, and so on and so forth. So we also have central banks who sell. A lot of this comes from profit taking. So, for example, for year to date, Singapore Central Bank has been selling gold quite a bit. Just last month, they sold 6 tons, and a few months ago, they were selling single-digit tons of gold. But what we think is that they're doing that for profit taking. Same for Uzbekistan as well. For Russian Federation, they have a coin minting program. So they mint the coins and then they sell it out to the masses locally. Same for Philippines as well as Germany. A lot of them are on a profit taking spree. You can see by the names of the central banks, right, that some of them are in emerging markets as well as Central Asia or Eastern Europe. So this is the spots of central bank banking community that we are seeing being quite bullish on gold, or they're allocating into gold. And the reason for that could be geopolitical, they want to grow their portfolio, or they have a target allocation. And of course, for jewelry, it has been a year-on-year drop. Unfortunately, uh, this is the hardest hit when it comes to the demand type for gold. Um, People are just not buying jewelry as much anymore. And they prefer to allocate into borrowing coins. So with whatever capital that they have, they prefer to buy a gold bar, for example, or a few gold coins to keep its value. We also think that when you're buying jewelry, there'll be maker's charge, GST, all these other little um, little costs that will make you buy the jewelry. Whereas if you buy maybe a coin or a bar, you probably pay a little bit for the design or something like that, but uh, you do get that whole product. So a lot of people that we talk to also ask us, where will the gold price or gold performance go from here? Just one thing to note, because we are from the World Gold Council, so we don't do price forecasts. But you can also find some price forecasts from a lot of other banks, and you can have a look at, where the gold price will go. And I'm pretty sure some people also do a bit of technicals. They can probably chart it as well. So there's a lot of other resources that you can point towards the price of gold. We also look into full year demand and supply outlook. From here on, what do we think is going to impact the different demand drivers? So the first one is the strong growth in gold-backed ETFs in the first half. We do feel that there is potential upside in the second half. A lot of this also depends on how the world economy is doing, and especially on the geopolitical side. Will there be any resolution in the Russia-Ukraine war, for example? And then when it comes to retail investment, we do think that there's the tariff story in China and India. We do think that equity markets in China and India might dampen gold, for example. For jewelry and technology, we do think that it will remain weak, but from the technology perspective, there is also demand for AI. For central banks, it depends on how much of these central banks have more appetite to take on gold at the current prices. When it comes to supply, there is stable production when it comes to the mining side. For recycling, it's not really growing because one trend that we notice is that there is some collateralized jewelry that's pledged in India. So around 120 tons of jewelry in India is pledged as collateral for consumption loans. We don't see any signs for distress selling yet, so we'll have to continue to the next quarter, have a look at how all these different demand drivers play out. And in the long term, although gold has been in the headlines quite a bit, if you look at the actual data, um, gold actually remains under-owned when you're comparing it to a share of global equities and bonds. So the optimal gold allocation based on our research is that it's between 2.5 to 10%, depending on the risk-adjusted returns that you want in your portfolio. However, when we're looking at the actual data, gold's share of global equities and bonds are actually much lower than that. So despite the headlines, it remains an underallocated asset in a lot of portfolios. So yeah, with that, thank you so much for tuning in, and I'll pass the time back to Nabila.
Okay, thank you, Marisa, for that insightful presentation. It's clear that gold continues to play an important role in preserving value and strengthening long-term financial planning, especially during these uncertain times. Okay, be sure to stick around until the end of the webinar as we have got an exciting surprise just for our attendees today. Okay. Yes. Building on that, I would like to share how you can easily access and invest in gold through a platform that is secure, user-friendly, and accessible for all Malaysians. Bursa Goldina. Okay, so what is Bursa Goldina? It is a Sharia compliant digital platform that allows users to buy, sell, trade, and exchange gold easily via mobile devices, offering full transparency, security, and convenience. Investor can start their gold investment journey with as low as 10 ringgit, making it accessible to all Malaysians. Okay. Okay, so Bursa Goldina, we offer a secure, flexible, and Sharia compliant way to invest in gold, packed with features designed for today's investor. First, flexibility. User can buy and sell gold easily and even cash out instantly at any time, offering a high liquidity right from the app. Next, security. All digital gold is fully backed by physical gold, securely stored in our professional vaults. In terms of access, it is very convenient. You can trade gold daily from 8:30 a.m. to 11:50 p.m., even on weekends, giving you more freedom to act when the time is right. Importantly, Bursa Goldina is a Sharia compliant. Every transaction is backed by actual physical gold, ensuring it aligns with Islamic finance principles. On top of that, we have made it easy to transfer gold to family and friends, instantly and secure via an app. No need for a physical handling. And if you prefer physical gold, you can redeem your holdings. Every 4.25 gram of digital gold can be exchanged for one physical gold dinar. To help you stay informed, you can also set custom price alerts to get notified when your target buy or sell price is reached. For your zakat obligations, our built-in Zakat Information Center helps you calculate your zakat obligation. And lastly, we offer a user exchange feature where user can trade directly with one another for even greater flexibility. Okay, so let's move on. Okay, so these slides provides a quick comparison of gold investment platform currently available in the market, from physical gold to what is commonly known as paper gold. Paper gold typically refers to investment that mirror gold prices but do not involve any actual ownership of physical gold. In contrast, Bursa Goldina is fully backed by physical gold and it is Sharia compliant, offering a more transparent and secure option for investors. If you look at the screen now, you will see a comparison of digital platforms offering both types. Among those that are backed by physical gold, Bursa Goldina stands out for having the lowest spread, meaning a better value for investor when buying or selling gold. So whether you are new to gold investing or looking for a more flexible and Sharia compliant platform, Bursa Goldina offers a secure, accessible, and cost-effective way to grow your gold savings. We hope this session has helped you better understand how gold, particularly through Bursa Goldina, can play a role in your long-term financial journey. Okay, so with that, we will now open the floor for some questions. If there's anything you would like to clarify, whether about the gold market, today's presentations, or anything about Bursa Goldina app, please feel free to drop your questions in the Q&A box now. Okay, please give us a moment to check the Q&A box. Okay, so we have some questions on the floor for Marisa. Okay, Marisa, do you see demand from central banks continuing into the near future?
Thank you for the question, Nabila. So we are seeing central banks turning from net sellers to net buyers since the past 10 years. So what this means is that before that, they didn't really think of gold as an asset class that they should actively manage. Rather, they are thinking, oh, it's a legacy asset. I'm just going to have it, keep it. I don't have to grow it. So what changed really is that appetite to diversify their assets. So we do feel that even based on our survey from central banks, we do feel that the demand would be modest, but it will still continue to grow. And the reason why that they even disclose to IMF could be multifolds, right? So the first thing is to really tell the world that we are actively managing our gold reserve, and we see that from emerging market central banks. So we do feel that the demand is there. And it really depends on which of these central bankers would start um, accumulating. Because once they accumulate, they start accumulating, it will be on a multi-year basis.
Okay. Thank you, Marisa. We have another questions on gold. So, how should retail investor in Asia think about assessing gold?
So, the answer to this question is pretty simple. It's the cost to the access. So, what is the comfort level of cost to access, as well as within all these instruments that is probably gold backed, how do you get your access to liquidity? Because people hold gold for a few things. Number one, they want to protect their portfolio, preserve the capital, but they also want to make sure that the liquidity accessibility is there. So there are a few things. So if something low cost, there could be ETFs, there could be gold accumulation program as well. If you really prefer something physical that you can keep at home, so bars and coins is still the best. So there's no right or wrong answer. It really depends on your comfort level. When in terms of cost to acquiring as well as cost to exchange that for liquidity.
Okay, so maybe perhaps we have another questions on gold. Gold has done well recently. So this is from one of our participants. Gold has done well recently. What are the main risks investors should keep in mind?
So gold, like all other asset classes, they are prone to short-term price swings. So when you look at the fact that um, short-term price swings are going into a target price that you were hoping for, that really is a good time for you to start allocating into gold. Another risk is really looking at how the broader community, investment community, looking at safe haven or risk assets. So that was probably, a few years back, where the line between risk assets as well as safe haven assets are quite clear cut, right? When economy is doing well, people shift to risk asset. But now what we are dealing a lot with is really the uncertainty. So at that point, even at the start when you feel that maybe the tariff news is abating, you just don't know what's happening later. So the risk to gold price is really what's happening in the macro perspective. But the role of gold in the past recent years has evolved. So I would say that short-term price swings would be not even a risk, but mostly like an opportunity for you to allocate into gold um, in the short term.
Okay, thank you, Marisa. So we have a few more questions to address. So this is one from one of our participants on Bursa Goldina. Okay, the question is, why should I invest on Bursa Goldina, where there are other platforms offering gold? Okay, so for Bursa Goldina, we stand out by offering a direct physical gold ownership, strictly Sharia compliance, and we also strong regulatory oversight under Bursa Malaysia. Unlike many other platforms, it guarantees real gold backing, secure storage, and the options for physical withdrawal. Our competitive pricing ensures a lower spread compared to other platforms, like I mentioned earlier. While some platforms may offer lower fees, they often lack transparency and direct gold ownership. And with this, I think this makes Bursa Goldina a secure, ethical, and reliable choices for a tangible gold investment. Okay, please give us a moment. We'll check for a few other questions. Okay, we have on the floor inquiring about the vault. Okay, where is the Bursa Goldina vault located? We have professional vault in Malaysia and Singapore. Okay, next one. What is the purity of the gold offered by Bursa Goldina? Bursa Goldina, we offer 999 gold, 24K gold. Okay, so we can take another questions. Can I self-collect my physical gold upon redemptions? Okay, so not at the current moment, but we can query it to your doorstep. The minimum redemption is 1 dinar coin, which is 4.25 gram of gold. The gold coin features Bursa own unique design, our special design. Okay, which you can only get it from Bursa Goldina. Okay, let's see. Hold on, yeah, give us a moment. Marisa, since we have a bit more time, so we have another question from the floor. Yeah. Okay, so the first one, central banks keeping a secret on their gold buying program is understandable. But for those that disclose their gold buying program, why would they do so?
So they disclose their gold buying program to the world or to IMF. And the reason for that is really just to signal to the rest of the world that they are diversifying away from US denominated assets. So you probably guess that a lot of assets that are held in the world are actually one way or another denominated in the USD. And for example, Poland, right? They've been quite open about the fact that they are allocating into gold for their reserves. And the reason also is because geographically they are between Ukraine as well as Russia. So there is that element of geopolitical diversification. And ever since, the US dollar has become some sort of like weaponized in a way. There was sanctions on Russia as well. So countries that are around this war zone, war area, need to find an alternative asset to allocate into. So they do so to tell the world. Some of them will continue to do so without telling the world. So the thing is, we don't talk to central banks directly. So we will not really know until they tell the world. So anything that we know that we're telling you here is actually public information.
Okay, so we have another question from the same participants.
Mhm.
How should we understand the trend of central banks accumulating more gold over the past few years? Is that a worrying or positive trend?
Okay, that's a great question. In terms of whether it's worrying or positive, I I just feel that they are adapting. So it is central banks going on a trend where they realize that they have to have alternative assets other than asset class that is denominated in USD or even in euro. Even recently, out on Financial Times, there was an article that mentioned that the ECB, European Central Bank, they actually have more assets denominated in gold now than before. Um, and the trend of central banks accumulating more gold over the past few years, in one way, you can think of it as a floor to gold demand. So as long as we see uh as long as we see demand from central banks, we know that there is a certain floor to the gold price, or the gold demand or gold performance is being supported by this. And the reason is also because central banks don't hold other precious metals. So they don't hold palladium or they don't hold silver, for example, as a recognized reserve assets. So what they're doing is they're going on a new adaptation. They're just adapting to how the world is right now.
Okay, so one last from the same participant. You have compared gold against most traditional asset classes, but how does gold compare against crypto asset?
Okay, so we get this question all the time. So the thing about gold and crypto is that they are not interchangeable. As you all know, probably crypto is that high risk, high reward asset, and gold is that asset that stems any volatility. So you can use both in your strategy or your investment strategy. You would need something that the price can go up quite crazily overnight, for example, like crypto. But when you need the liquidity, you need a little bit of protection from the volatility of your entire portfolio. That's where gold comes in. It's more like a buffer, or it's like a risk ballast, and your equities, cryptos, and all these other assets are more of your growth engine. But that being said, the more risk assets you have, the more safe havens you also need just to balance your portfolio as well.
Okay, thank you. Thank you, Marisa.
Thank you.
Um, okay, so we're gonna take this as the last question for today. So this is about PGD. So yeah, they are asking where and how do we sell back the physical gold dinar? So for Bursa Goldina, yes, whatever that you have, you can sell back. But for now, you can sell back to our partners, which is Post Arano. Mm. Okay. Right. Thank you, everyone, for your insightful question. But unfortunately, we are running out of time. So apologies if we are unable to address all your queries. If you have any remaining questions, please feel free to reach out to us through email at pgdsupport@bursamalaysia.com. Okay, so before we wrap up, here's just a quick reminder to take action on what you have learned today. So specials for today, in conjunction with the Merdeka Month, we are offering an exclusive treat. Download the Bursa Godina app, invest a minimum of 200 ringgit, and enter the promo code BGDWEB Web 4 to receive 0.068 gram of free gold. This offer is for a limited time only, so do share with your friends and family. It could be the start of their gold investment journey too. If you haven't downloaded the app yet, just scan the QR code on the screen. Don't forget to use the promo code BGDWeb4 during the registration to unlock your reward. Okay, last but not least, we will also love to hear your feedback. Simply scan the QR code to share your thoughts. For further assistance, email us at bgdsupport@bursamalaysia.com. Thank you once again for joining us today. We hope this session has inspired you to take the first step in making gold a meaningful part of your financial journey. The webinar recording will be made available on Bursa Malaysia's YouTube channel and the IR4U site. I'll be sharing the links in the chat box shortly for your reference. On behalf of the team, thank you for your time and participations. Stay safe, and we look forward to seeing you at our next session. Thank you. Then, thank you, Marisa.
Thank you, Nabila. Bye-bye.
Bye-bye.
Bye.